Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Powell Industries, Inc. quarterly report. Powell Industries, Inc. offers a diverse range of products and services to various industries worldwide. The company's product portfolio includes custom-engineered equipment and systems such as power control room substations, electrical houses, distribution switchgears, medium-voltage circuit breakers, monitoring and control communication systems, motor control centers, switches, and bus duct systems. In addition to its products, Powell Industries also provides a range of services including field service inspection, installation, commissioning, modification, and repair. The company offers spare parts, retrofit and retrofill components for existing systems, as well as replacement circuit breakers for switchgears. These services cater to various industries such as onshore and offshore production, liquefied natural gas facilities and terminals, pipelines and refineries, petrochemical, electric utility, light rail traction power, mining and metals, pulp and paper, data centers, commercial construction, and universities and government entities. The company operates in multiple regions including the United States, Canada, the Middle East, Africa, Europe, Mexico, Asia/Pacific, and Central and South America. With a rich history dating back to 1947, Powell Industries has established itself as a leading provider of custom-engineered equipment and systems to various industries worldwide. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to skyrocket. The sudden surge in a company's stock price is often a result of various factors that contribute to its growth and success. One key reason is the company's financial performance, which may include increased revenue, improved profitability, and strong cash flow. This can be attributed to innovative products or services, effective marketing strategies, and efficient operations. Another factor that can drive up stock prices is industry trends and market demand. If a company is at the forefront of a growing industry or has developed a product that meets an emerging need, its stock price may skyrocket as investors become more optimistic about its future prospects. Additionally, mergers and acquisitions, partnerships, and strategic alliances can also contribute to a company's growth and increase stock value. Furthermore, changes in leadership, management, or corporate governance can also impact a company's stock price. A new CEO with a proven track record of success or a change in strategy may lead to improved performance and increased investor confidence. Similarly, regulatory changes or government policies that favor the industry or company can also contribute to its growth. Lastly, external factors such as economic conditions, interest rates, and market sentiment can also influence stock prices. A strong economy with low unemployment and rising GDP can create a favorable environment for companies to grow and increase their stock value. Powell Industries, Inc. market capitalization of $6 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Powell Industries, Inc. holds a significant advantage in their industry. Powell Industries, Inc. trades at a higher price-to-earnings ratio of 35 times and a higher price-to-book ratio of 10.05 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 42% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, the increase in sales of custom-engineered products and systems under long-term fixed-price contracts has been a significant contributor to revenue growth. Additionally, strong demand across commercial and other industrial markets, particularly for data centers and cloud computing infrastructure, has driven growth. The oil and gas markets have also seen robust customer activity due to rising global demand for LNG and gas-to-chemical processes. Furthermore, growing investment in cleaner energy solutions, including hydrogen production, carbon capture, and alternative fuels, has contributed to revenue growth. The resurgence of power generation investment in the electric utility market has also been a significant driver. On the other hand, revenue decline is primarily driven by reduction in backlog within the petrochemical market, less booking activity in this market, volatility in fixed-price contracts, quality problems with products, and penalties or additional liabilities from performance obligations. These factors have contributed to a 31% decrease in backlog within the petrochemical market. Geographically, the Middle East and Africa region has seen significant growth of plus 117.6%, followed by Europe at plus 48.7%. The Asia/Pacific region has also experienced substantial growth of plus 234.9%. In terms of market sectors, the electric utility market has grown by plus 35.6%, while the light rail traction power market has seen a modest increase of plus 4.9%. The financial performance of a company has shown significant improvement over the past year. Net income has increased by $6.63 million to reach $41.39 billion, representing a 19% growth. This substantial rise can be attributed to various factors, although they are not explicitly stated in most pages. A closer look at the profit margins reveals an upward trend as well. The gross profit margin has risen from 24.7% in 2024 to 28.4% in 2025, while the operating income margin has increased from 14.7% to 17%. Furthermore, the net profit margin has also seen a notable increase of 1.3 percentage points, rising from 20.1% to 21.4%. The reasons behind this improvement are not clearly outlined in most pages, but it is mentioned that higher revenues and a greater gross profit margin have contributed to the increase in net income. Despite the lack of explicit explanation, these statistics demonstrate a positive shift in the company's financial performance, indicating a more efficient operation and increased profitability. The company is indeed generating positive operating cash flow, as evident from the financial statements provided. The net cash provided by operating activities for both 2024 and 2025 shows a significant increase, indicating a healthy trend. For instance, in 2025, the company reported $43,638 in net cash provided by operating activities, which is a substantial improvement from the previous year's figure of $37,072. This upward trajectory suggests that the company's operations are generating sufficient cash to meet its financial obligations and invest in growth initiatives. Furthermore, the operating activities for the 3 months ended December 31, 2025, also demonstrate a positive trend, with a reported $43.6 million compared to $37.1 million for the same period in fiscal 2024. This increase in operating cash flow is a testament to the company's ability to manage its finances effectively and generate sufficient cash from its core operations. In conclusion, the financial data provided clearly indicates that the company is generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level has undergone a notable reduction from $468,214 to $425,482 over time. This decrease suggests a positive trend in the management of the company's financial obligations. However, despite this improvement, there is limited information available regarding changes in interest expenses. The absence of explicit mention of interest expenses in key pages makes it challenging to assess any significant alterations in this area. The management of the company is optimistic about its future prospects. The majority of revenue comes from custom-engineered products and value-added services that are transferred to customers over time, indicating a strong focus on long-term relationships. A significant backlog of $1.6 billion, with 58% expected to be recognized as revenue within the next 12 months, further supports this outlook. The company is experiencing strong demand across key markets, particularly in commercial and other industrial and oil and gas sectors. Management plans to continue investing in these end markets while diversifying into cleaner energy solutions such as hydrogen production, carbon capture, biofuels, and sustainable aviation fuel. This strategy aims to develop new channels to electrical markets through original equipment manufacturers and distribution market channels. However, management is also aware of potential risks that could impact the company's business, including disruptions from business system failures or cybersecurity attacks, data privacy and security risks, ESG initiatives negatively impacting operations, key personnel departures disrupting operations, and the uncertain outlook with actual results potentially differing from forward-looking statements. Despite these concerns, the overall tone suggests a positive outlook for the company's future prospects. The company's financial activities have been marked by a commitment to returning value to its shareholders. One key aspect of this strategy is the payment of dividends. As noted in multiple sections of the report, including pages 4, 11, and 32, the company has consistently paid out dividends to its investors. This demonstrates a focus on rewarding shareholders for their investment. In addition to dividend payments, the company has also engaged in share buybacks. Specifically mentioned on page 11, this initiative allows the company to repurchase shares from the market, thereby reducing the number of outstanding shares and potentially increasing earnings per share. By combining these two strategies, the company is able to demonstrate its confidence in its financial performance while also providing value to its shareholders. Concerns about inventory buildup and supply chain disruption are prevalent. Inventory buildup is a significant issue, with excessive and obsolete stockpiles taking up valuable space and resources. Specifically, raw materials and work in progress have increased, while spare parts and replacement circuit breakers for switchgear are often obsolete or no longer produced by the original manufacturer. This inventory buildup not only wastes resources, but also poses financial risks, as these items may never be used. Furthermore, supplier concentration and limited supplier capacity may lead to supply chain disruptions, which can negatively impact business operations and results. Disruptions in the global supply chain have already had a significant impact on our business, with delays and uncertainty surrounding key component parts and commodities. The potential for unanticipated changes in suppliers adds another layer of risk to the supply chain. If current suppliers are unable to meet demand, or if new suppliers cannot be found quickly enough, it could lead to significant disruptions and losses. To mitigate these risks, it is essential to develop strategies that address inventory buildup and supply chain resilience. That concludes the financial summary for Powell Industries, Inc. Feel free to comment below, and I will be happy to answer them when possible.